Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the trade setup, the latest GDP print, the stocks in news, and of course, we'll be getting all your stock-related queries answered by our expert on the show. So do keep commenting on our live feed and we will be taking up those queries. But before we move any further, let's take a look at the top headlines at this hour. Well, Dow Jones slides close to 240 points as Wall Street ends February with losses. For the month, the index finishes with a 4% cut. Asian markets open mixed. Chinese manufacturing PMI for month of February beats estimates. Now, SGX Nifty is hinting at a mildly negative start for the Indian market. Axis Bank completes acquisition of Citibank's India consumer banking business 11 months after the lenders inked a deal. The transfer of all verticals effective from today helps Axis add 30 lakh customers. Stocks in focus today are Delhivery, as reports suggest SoftBank is likely to sell stake worth 600 crore rupees via block deals. Also in focus will be Axis Bank, Vedanta and Adani Group stocks. Third quarter GDP growth slows to 4.4%. However, it's because GDP growth for FY22 has been revised sharply higher to 9.1%. GDP for FY21 has also been revised higher. For the third quarter of the current year, the push has come from strong capex growth while consumption has slowed. The Weather Department warns of heat wave-like conditions from March to May. Chief Economic Advisor says government must be ready with some monetary policy and supply-side measures for next fiscal given the possibility of an El Nino. Let's quickly get on board our technical expert for the day. Kunal Shah of LKP Securities is joining us this morning. Good morning, Kunal. Good to have you on the show. Well, the Nifty barely managed to hold on to that 17,300 mark. 8th straight day of losses. The next level to watch out for will be the 20-month moving average of 17,280 or thereabouts. What would you expect the markets to do today? Will the Nifty stage a comeback or do you expect the weakness to continue?
Good morning, Nandita. I think what the market has done, at least in the last 9 days, is something what nobody had expected. At least in the last 2 to 3 years, we have not seen consecutive 9 days of falls in the Nifty index. So this is something what the market is trying to tell us from the current levels, that the trend is not looking good. We might have some pullback rallies in the near term. But if I talk about today's trading session, 17,400 continues to be a critical resistance for us. Till the time we stay below this level, my view will be bearish. Even if I look at the options data, 17,400 is the call where we had seen significant amount of call writing which was happening. So clearly 17,400 needs to surpass on an intraday basis. Then only we can see some momentum towards 17,500, 550 kind of a level. So at least till the market starts, and if we sustain below the 17,400 mark, my view remains bearish. We can test levels of 17,150 to 17,100 on the downside. So one should still keep a sell on rise approach. Whatever bounces you get should be utilized to again sell the index. Now, vis-a-vis, if I talk about the Bank Nifty index, that is where some strength is visible. In the last 1 to 2 days, it was the Bank Nifty index which was showing some strength. But over there also the data doesn't look very attractive. 40,300 continues to be a hurdle. Whenever we have touched the 40,300 mark, we have seen some selling pressure. On the lower end, 39,700 has been my strong support. So this is a range in which the Bank Nifty index is stuck. If we break below 39,700, then expect the momentum to get aggressive on the sell side, where we might see targets of 38,000 on the downside. So Bank Nifty looks very much on the sideways territory. I will be bullish on the index only above 40,300.
Right, sell on rally, and those are the levels to watch out for on Bank Nifty as well. Hold that thought, Kunal. We'll be coming back to you, but let's also go across to Latha Venkatesh now for telling us about the third quarter GDP figure that has come in. Well, good morning, Latha ma'am. Good to have you on the show. Well, the third quarter GDP has come in at 4.4%, which is slightly below our estimates of 4.7%. Now, the growth figures for FY22 and FY21 have also been revised higher. Tell us, what are you making of the fine print of these figures?
Okay, well, first up, 4.4 looks like a disappointment. I mean, even lower than 4.7, but we must give it that year ago, Q3 was very strong because we were coming out of a lockdown, we were coming out of a Delta wave in 21. So obviously on that base, maybe 4.4 can be accepted as not all that bad at all because of the base. And the base is now evident in the numbers also. FY22 numbers have been revised up by almost 2 trillion rupees. So whereas we thought we were growing by 8.7, we have actually grown in FY22 by 9.1. And even the FY21 base is raised. We thought we had fallen by 6.6%. We have actually contracted by 5.7. That's 90 basis point higher. So, you know, we have to give it that the base was stronger, especially in Q3. Within Q3 itself, what worked for the economy was services. There's a category called trade, hotels, transport, communication, broadcasting. You know, all your UDP hotels and ST buses, everything come there. It's broad economic activity. That's done well, 9.7%. Construction has done well, 8.4%. Utilities, you know, power, gas, the things we all use, that's done well, 8.2%. What's not done well? Manufacturing, disaster, minus 1.1. We were actually expecting minus 2, but that's because consumption was slowing. We heard all FMCG companies tell us that, and exports have slowed. Raw material prices were still high. So manufacturing is a disaster. Government consumption was also less. You know, the schools they put in, defense expenditure, all that has been lower, just up about 2%. Also on expected lines because government is trying to reduce its fiscal deficit. Okay, now you can look at GDP from output side, you can look at it from expenditure side. Where did the country spend? The country didn't spend on consumption. Consumption was up only 2.1%. That's worrying, you know. Ultimately, consumption is the motor of more. Why would you put in, you know, capex? Only if you see more consumption. So we should worry about this slowdown to just 2.1%. Government consumption is minus 0.5%. So that's bad. But capex is very good. What we call gross fixed capital formation is up 8.3%. That's excellent. One hopes, of course, that those capex will generate jobs and income in the coming days. Now we have to do 5.1% in the fourth quarter, current quarter, to reach 7%.
7%
Looks
target,
tough.
yes.
Looks tough.
Looks tough. Okay, so the IMD has also predicted heat waves, and that would impact the wheat production as well, right? We already have curbs in place for wheat exports, right? And wheat forms a big part of retail inflation. So do you think there'll be upward pressure? There'll be pressure on RBI to revise rates even upwards, further upwards than the 25 basis points that
you have to get a farmer or an agronomist or you know, an agricultural economist at least, like Dr. Ashok Gulati, to be able to answer exactly the impact on wheat crop. It's too large a country for anyone to be able to take a call now. If the heat is going to impact, because we've already seen the impact on onions, so it is logical to believe that it could expect other crops as well, then we have a problem. Because one is expecting that rural consumption will go up because the Rabi harvest will come in. If that's going to be impacted in some way, it's not good for the economy from even the growth angle. From the inflation angle, it will be worse. Just you remember, in January, why did we get that surprise 6.5% CPI when we were all expecting, you know, 6%?
6%,
because of cereals. Cereals were up 16% year on year and 2.5% month on month. So if this news filters in of, you know, a poor wheat crop, even before the actual harvest is known, the sentiment runs ahead.
Yes.
And we could have an inflation problem. So most people are penciling in one rate hike, but they are penciling in 3 rate hikes by the Fed. You're penciling in El Nino. So who is to say another hike may not happen?
And
one. But I think the 6.75 repo rate in April is looking more and more a possibility.
Well, 6.75, not good news when it comes to the rate trajectory. Well, on that note, thanks a lot, Latha, for joining in and putting things into perspective for us. Let's go back to Kunal then and discuss stocks that will be in focus today. First up is Axis Bank. It has completed the acquisition of Citi's India consumer business. And, you know, today there will be a press conference at 4 o'clock where the top management will be outlining the integration process as well. Kunal, what are your thoughts on Axis Bank on the charts, given the fact that the stock has lost somewhere around 10% on a YTD basis?
If I look at Axis Bank on the technical charts, the trend is clearly on the downside. On the daily chart also, we are seeing a lower high, lower low formations which are intact. Now, the stock on the lower end has the support at 830. Whenever it has touched the level of 830, we have seen some minor pullbacks. So if stock is able to sustain about this level, we might see some gradual recovery towards 860, 870 kind of a level. At the current level, my view would be sideways. I will wait for a breakout above 855. Once that is taken place, we might see this rally extending toward 875. So at the current levels, I would say avoid Axis Bank. Probably it's not in a clear-cut direction. If you are holding long positions, then 830 should be your stop loss.
Well, 830 should be the stop loss on Axis Bank. The next stock on my list is Vedanta. The stock was under extreme pressure yesterday on default fears, but the company has assured that there is no question of a default and that it is confident of meeting all its debt obligations till the first quarter of FY24. In fact, it has also prepaid some of the debt obligations till March. Do you expect some kind of a pullback to come in now that there has been a clarification from the management, or do you expect this weakness that we saw yesterday to continue in today's session as well?
If I look at Vedanta chart, I think the chart had some bearish formations from the month of April 22 only, where it made a top at around 430. From 430, we saw a default towards 215 zone, and then we saw pullback rally towards 323. So I think the undertone is very bearish at the current levels. The stock has breached its critical support on a weekly chart as well. So I think since the stock is in an oversold territory, a minor pullback would be there, but I think that pullback again should be utilized to sell. No need to initiate fresh long positions at the current levels. The resistance is clearly visible on the higher end around 280. So if you get around the stock at 280 on this pullback, my suggestion is again go short into the stock. We might see again lower levels of at least 240 to 230 on the downside. So I think it's still in a sell on rise mode. Weekly chart shows a clear-cut breakdown with volumes, and the trend looks very negative from the current levels as well.
Well, the trend looks very negative when it comes to Vedanta. I want to get back to the banking space, Kunal, because we are getting queries on the banking space. We already spoke about Axis Bank, and you penciled in a stop loss of somewhere around 830 or thereabouts. Trilok has written in, and he wants to know your thoughts on Axis, which you've already shared, and ICICI Bank for the short and long term. Axis you've already shared with us, but what about Axis Bank? The shares are down somewhere around 5% on a YTD basis, but given the fact that quarterly performance was pretty good, and there were margins were at multi-quarter highs. Would you advise investors to buy on the kind of dips that we have witnessed in the banking space in the last few months?
See, as I mentioned, the market undertone looks very bearish. Specifically, if I talk about Bank Nifty, it was showing strength in the last 1 to 2 days. So I would say in the entire private banking space, one should wait and watch for the next couple of days at least. If we get that breakout in the Bank Nifty index above 40,300, that is where the actual momentum will start picking up in the banking stock. For me, if I talk about ICICI Bank, it is the stock which is actually trying to hold the Bank Nifty index. Day before yesterday, we had a strong buying from the lower levels on ICICI Bank. And if there is a follow-up buying in today's trading session, so I'll be looking for a breakout above 860. So if 860 is crossed in today's trading session, we might see some recovery towards 890, 900 zone on the upside. So if you are still holding the stock, I think one should still hold it. We can see some gradual recovery on the upside. 900 is what I'm expecting from the stock in the near term. On the lower end, if I talk about the support, it's at 830. Again, so if 830 is breached on ICICI Bank, and if you are holding on long positions, then kindly exit your position. We might see further correction. And that 830 support will be breached if Bank Nifty breached 39,700 on the downside. So I think it's more or less they are more correlated with each other. Track the Bank Nifty index. If it breaches the support, then it's time to exit ICICI Bank as well.
Right, so those are the levels to watch out for on ICICI Bank. Trilok, hope that answers your question. The next stock on my list is Delhivery. Now, reports suggest that SoftBank will be selling stake worth 600 crore rupees via block deals. Very recently, Tiger Global also sold, over a little over 1.5% stake via block deal, right? And the stock has given returns to the tune of 13% over the last 1 month. On the charts, would you say that this upside is likely to continue, or do you expect some bit of profit booking to come in now?
See, I think if we talk about Delhivery, the stock had seen a sharp correction from at least 640, 650 zone to the level of 300. So you can say there was a clear-cut 50% correction in the stock. Now, in the last at least 1 to 2 months, what the stock is trying to form a base on the lower end. But still, the base that has been formed, we are not seeing much of volume buying on the lower end, which is a concern for me. So whatever rally, what we have seen at least in the last 1 month from the level of 300 to the level of 350, this has not been backed by volumes, and this is a major concern for me. On the higher end, if I see the resistance is clearly visible at 360, as long as 360 is not taken out with volumes, I will not be bullish on the stock at the current levels. On the lower end, if the stock slips below 335, then the selling pressure will again start to aggravate on the downside. So I think till it's an avoid, don't try to be aggressive long at the current levels. 360 is a level one should watch out for. Once that is break with volumes, then you might see this rally going towards 420, 440 kind of a level.
Right, not a bullish view coming in on delivery then. Let's also shift focus to another query that's coming in from Prabhu, and he wants your thoughts on Amara Raja battery from a long-term perspective. What would you advise somebody to do? Should somebody buy it, or if somebody is holding it, should they hold on to it or look at exiting at this current levels?
See, I think if we talk about the entire battery space, whether it's an Amara Raja or whether it's an Excite Industries, a lot of people have been bullish looking at the EV theme. And post that, the EV theme, which started to pick up from 2020, Amara Raja battery has been a massive underperformer. Even if I look it on the technical charts as well, the stock is currently trading at a very critical support zone. Now, in the month of November 2022, the stock had opened with a massive gap up around 550 zone, and from there we had seen a rally towards 650. Now, exactly we are trading at 554 currently. So it's trading at a very critical support zone. I will not be someone who will tell to sell the stock at the current levels. And even if somebody wants to initiate a long positions, a very good to risk to reward ratio what you are getting at the current zone. For me, a bullish close is very important. If the stock closes above 570 kind of a level, then I would say my long has been triggered. I will buy it with a stop loss of 550 and look for a target of at least 600 and 612 on the upside. So for technical setup, wait for a breakout about 570. Those who are holding it for a long term and want to hold it as a long term pick as well, I think the same level of 550 should act as a support for you guys. If the stock closes below 550, then one should definitely exit the stock.
Right, a close below 550 warrants and exit when it comes to Amara Raja battery. The next query is coming in from Deep Shikha, and she has a query on Dr. Lalpath Labs. She's purchased shares at 2,500 rupees. The stock is trading somewhere around 1960 levels or thereabouts, and it saw a good 3% rally coming in yesterday. Now she wants to know whether she should be averaging this stock at current levels.
Yeah, I think if we talk about all the Path Lab stocks, this were the COVID favorite stocks where we had seen a massive rally into this stock. Now, if I talk about the space of Path Labs, there has been an intense competition amongst the entire lab stocks. So that is where we are seeing some correction and selling pressure over there. But at the current levels, if I talk about Lalpath, it was trading around 4,000. Now it is trading around 2,000 zone. So good amount of correction what we have seen here. Now in the last 1 to 2 days, we have seen some good buying in the stock from the lower levels. So 1900 has been a zone from where the bulls have been active, and we are seeing some buying from the lower levels. So I think a good setup. Even yesterday, the closing was very strong. We got at least the stock closed above the previous 4 days high. So where the market is correcting, this is a stock which is showing some strength because it is trading at a critical support zone. So one should definitely hold on to the long positions. Even if one wants to average at the current levels, definitely one can do that. 1900 should be a stop loss on the downside. I'm expecting the stock to gradually recover towards the levels of 2200.
Well, so you can look at averaging the stock also at current levels. Well, the next query is coming in on Adani Enterprises. We saw the stock stage a comeback and close higher by about 15% in yesterday's session. Now, Chetan has written in and he wants to know your thoughts on this stock. Now, there is a bit of news flow as well when it comes to Adani Enterprises. The group will be repaying loans to the tune of $790 million by March. That's according to reports, of course. Do you think the kind of comeback that we saw yesterday will continue into today's session as well?
So yes, if we talk about the entire Adani pack, I think this has been one of the hot news among everyone, and everybody was invested. Is this the right level to buy Adani stocks or no? So see, if I talk on the technical charts, we are seeing some base formation happening at the lower levels. But when the stock has a lot of news base, even on the chart perspective, we might see some disturbance as well. But if I talk purely on a trading perspective, one should definitely initiate long positions at the current levels. 1100 has been a strong support for the stock. Whenever it has touched those levels, we have seen a sharp recovery earlier as well. In fact, on 3rd of Feb, we had seen a sharp bounce from 1100. And even in yesterday's trading session, we saw a bounce back from the same level of 1100, 1150 zone. So I think a good support has been formed. There was volume-based buying, so that is a very good point on the support front. One can see a gradual recovery in today's trading session, at least towards 1450, 1500 kind of a zone. So I'll be bullish on the stock at the current levels. One should definitely look at for a trading perspective. With a short-term support, if I talk about it's 1200. So with a stop loss of 1200, one can initiate long positions. 1450 to 1500 is what I can expect in the short stock in the near term.
Right, so that's the call on Adani Enterprises. We also have a query on Asian Paints. Now, paint stocks saw a good run in a weakish market yesterday, right? We have a query asking about your thoughts on this stock. Like the company had flagged off some concerns, over demand in the third quarter after they had reported the third quarter earnings. The kind of weakness that it has seen over the last few months, would you advise somebody to buy into this counter now that we've seen some kind of a recovery kick in?
I think paint as a sector has been under a lot of pressure because of the intense competition, what it is getting from the other companies as well. So as a sector, if you talk about it is consolidating in a broad range, and there will be leaders which will be coming out. And if I talk about Asian Paints, it has been a leader in the paint industry. Now the technical chart setup doesn't look very attractive. The stock has seen some good correction from the higher levels. Now, since the stock is trading in an oversold territory, we can expect a minor bounce in the stock. So for me, the stock resistance is at 2,856. So 2856 is a resistance for the stock. Once it crosses those levels, we can see a gradual recovery towards 3,000 levels on the upside. So since the risk reward is favorable, a good base formation is happening at the current levels. One can initiate long positions. 2750 should be a strict stop loss on the downside. I can expect the stock to go towards the levels of 3,000.
Well, so that's the call coming in on Asian Paints. Well, with that, we're completely timed out. So this wraps up our query segment. But if we couldn't take your query, don't get disheartened. We will try and take it up tomorrow as well. Kunal, before I let you go, do let us know about some of your stock recommendations for the day today.
See, I think, as I said, the market might continue to remain under pressure. The market looks bearish, but there will be stock-specific and sector-specific movement. Now, one stock which I'm very bullish on from the current levels, the name of the stock is AB Capital, that is Aditya Birla Capital. The stock in yesterday's trading session was almost up by 2.8%. The stock is on the verge of a breakout from a falling trend line on the technical charts. So I can see some good buying momentum coming in the stock where the lower end support is at 140. So one can go long on Aditya Birla Capital at the current levels of 145, 146 zone. 140 should be a stop loss on the downside. I'm expecting the stock to go towards 152 to 155 levels on the upside. So Aditya Birla Capital is one stock which is looking very good. Even the momentum indicator RSI has given me a positive crossover on the daily chart, which confirms my buy signal as well. So good risk to reward and a good upside what we can see from Aditya Birla Capital from the current levels. One more stock which I would be looking on the positive side over here is IEX, that is Indian Energy Exchange. The stock has been forming a flat formation on the daily chart. The breakout level is about 145. So today, if the stock goes above 145, we will see a clear-cut breakout from a flat pattern, which gives me a target on the upside of 150 to 152 on the higher end. So currently, the stock is trading around 145 zone. One can initiate long positions. Again, 142 should be a stop loss on the downside. I'm expecting at least 150 to 152 levels on the upside. So IEX and AB Capital, these are the two stocks which are looking good on the long side.
Well, IEX and AB Capital are two of the stock recommendations coming in from Kunal this morning. Well, with that, Kunal, thanks a lot for taking out time and answering all our viewer queries and sharing your thoughts with us this morning. With that, it's a wrap on Morning Trade and a goodbye from me. But don't go anywhere because coming up next is Opening Bell.